What if one day your wallet became completely useless? Not because you spent all your money, not because inflation turned a $20 note into the financial equivalent of a participation trophy, but because physical cash simply stopped existing. No notes, no coins, no spare change hidden between your car seats that you've been meaning to cash in since 2019. Every dollar you own exists only as a number on a screen. Governments call it progress. Banks call it efficiency. Tech companies call it convenience. And honestly, they're not wrong. Tapping your phone is easier than carrying cash. It's faster, cleaner, more convenient. You don't have to find an ATM. You don't have to count change. You don't have to awkwardly stand at the checkout pretending you're not holding up the line while searching for coins. But critics argue there's a hidden cost to all this convenience. Because when money becomes completely digital, it stops being something you hold and becomes something you access. And those are two very different things. The strange part, this isn't some far-off future. It's already happening. And by the end of this video, you'll understand why cash is disappearing, who benefits the most, and the one question nobody seems to have an answer for. Let's start with number 10. Number 10, cash is already disappearing. Take a second and think about the last time you actually paid for something with cash. Not because your card wasn't working, not because your phone died, just because you wanted to. For most people, it's surprisingly hard to remember. Across countries like Australia, Sweden, and the United Kingdom, cash usage has been falling for years. Cards replaced cash, phones replaced cards, now people are paying with watches. At this rate, your fridge will probably be buying groceries before your kids do. For younger generations, money is becoming completely digital. Many teenagers have never written a check. Some have never even used an ATM. To them, money isn't something physical. It's just numbers moving around inside apps. But cash disappearing naturally isn't actually the interesting part, because every major change creates winners. And the first winners are businesses. Number 9. Businesses love cashless payments. Imagine you're running a busy cafe. Would you rather count cash at the end of every day? Balance the till? Deal with mistakes? Worry about theft? And make trips to the bank? Or simply let everything happen automatically? Most business owners already know the answer. Cash creates work. Digital payments remove it. Transactions become faster. Staff spend less time handling money. Accounting becomes easier. And security risks drop. For many businesses, cash is becoming more trouble than it's worth. But while businesses definitely benefit, they're not the biggest winners. Not even close. Because the next group saves something far more valuable than time. Billions of dollars. Number 8. Banks save billions. Most people never think about what it takes to keep cash moving. A team is in armored trucks, security systems, cash counting facilities, storage, insurance, staff. The entire system costs a fortune. Every physical note has to be printed, transported, secured, tracked, replaced, and managed. Digital money doesn't. It's dramatically cheaper. A number on a screen costs far less than a truck full of cash. And when billions of transactions move online, those savings become enormous. But if you think banks are excited about digital money, wait until you see why governments are paying attention. Because this is where things start getting interesting. Number 7. Governments gain visibility. Cash is private, digital payments are not. Every digital transaction creates a record. Who paid? Who received it? When it happened? How much was spent? Supporters argue this helps fight crime, tax evasion, money laundering, fraud, corruption, and they're not wrong. Digital transactions can make criminal activity harder to hide. But critics argue there's another side to that coin, because if every transaction is recorded, every transaction can potentially be monitored, and that leads directly to one of the biggest concerns people have about a cashless future. Number 6. Privacy begins to disappear. Think about everything your spending habits reveal. What you eat, where you travel, what you buy, what subscriptions you have, what time you wake up, what time you go to bed, whether you're saving, whether you're struggling, whether you're lying to your partner about how much you spent on fishing gear. Digital payments create data. Lots of it. Now, that data can be useful. It helps detect fraud, improve services, protect customers, but it also means your financial life leaves a digital trail. And while privacy concerns get most of the attention, some experts think another problem is even bigger. Number 5. What happens when the system goes down? Imagine walking into a supermarket. Your card doesn't work. The payment network is down. The internet is offline. The bank is experiencing technical difficulties, which is corporate language for we broke something and we're currently panicking. In a cashless society, outages become a bigger deal. Power failures, cyber attacks, network disruptions, banking errors. Cash has one massive advantage. It works even when technology doesn't, and history shows that these disruptions happen more often than most people realize. But system failures aren't the only thing that can stop you accessing your money, because sometimes the system is working exactly as intended. Number 4, the power to freeze money. This is where the conversation becomes more controversial. Banks already freeze accounts under certain circumstances. Fraud investigations, court orders, suspicious activity, sanctions, identity theft concerns. There are often legitimate reasons for this, but the reality remains the same. If your money exists entirely inside a digital system, access can potentially be restricted. Supporters argue safeguards exist. Critics worry those safeguards may not always be enough. Regardless of where you stand, one thing is clear. The more digital money becomes, the more important these questions become. And that brings us to one of the most debated developments in modern finance. Number 3, the rise of government digital currency. Around the world, governments are exploring something called CBDCs, central bank digital currencies. Think of them as digital versions of national currencies. Supporters believe they could create faster payments, lower costs, greater efficiency, better financial inclusion. Critics worry they could increase centralization and reduce privacy. The truth? Nobody knows exactly what the long-term impact will be, because most projects are still being researched, tested, or debated. But what happens next depends on a much bigger question, one that divides economists, politicians, and financial experts. Number 2, convenience versus control. This is where the entire debate comes together. Supporters see a cashless future as inevitable, faster, safer, cheaper, more efficient. Critics see potential risks, less privacy, greater dependence on technology, more centralized systems. And here's the thing, both sides make valid arguments. Cashless systems offer incredible convenience, but convenience often requires trade-offs. The question is whether those trade-offs are worth it. And that leads to the biggest question of all. Number 1, what happens if cash completely disappears? For thousands of years, money has existed in physical form. Coins, notes, gold, silver, something you could hold, something you could exchange, something that worked without permission from a network, device, or platform. If cash disappears completely, what changes? What protections disappear with it? What benefits emerge? Would most people care? Would younger generations even notice? Or would cash eventually become something we explain to our grandchildren the same way we explain DVDs, payphones, and internet dial-up noises? Nobody knows. But that's exactly why this conversation matters. Because the future isn't decided when something disappears. It's decided while it's disappearing. Cash is not just money, it's privacy, it's backup infrastructure, it's independence. For some people, a cashless future represents progress. For others, it represents a shift in power. The question isn't whether cash usage is falling. That's already happening. The real question is this: if every dollar you own eventually becomes digital, who ultimately controls access to it? And how much convenience are we willing to trade for that future? What do you think? Is a cashless society inevitable? Or should physical cash always remain an option? Let me know in the comments.